Are you ready to make some serious cash? The political landscape just shifted, and with a new president comes a whole new ballgame. That's right, Donald J. Trump is in the White House, and that means big changes are coming to Wall Street. We're not here to talk politics, though. We're here to talk money. And trust me, there's a goldmine of opportunity waiting for savvy investors who know where to look. Forget the doom and gloom, forget the naysayers, because in this video, we're diving headfirst into the belly of the beast with 5 stocks primed to explode under a Trump presidency. I believe these stocks will do well in 2025 on this newfound momentum. Buckle up, buttercups, because this is going to be a wild ride. But before we get started, do me a favor and smash that like button like you're the Donald signing executive orders. And while you're at it, hit that subscribe button too. It helps the channel grow, and it helps me deliver this top-shelf financial video straight to your screens. Now let's get down to brass tacks and talk about how to make you some serious dough in the age of the Donald. Yep, Elon Musk. First up, we're talking Tesla, ticker symbol TSLA. Now you might be thinking Tesla, that's a no-brainer even without Trump, and you wouldn't be wrong. Tesla is a titan, an innovator, a company changing the world one electric car at a time. But here's the thing, under a Trump presidency, Tesla is poised to become an absolute juggernaut. Why? 2 words, American manufacturing. Trump has made it crystal clear that he wants to bring jobs back to America, and what better poster child for American manufacturing than Tesla? With Trump's emphasis on domestic production, Tesla stands to benefit from tax breaks, incentives, and a whole lot of good old-fashioned American pride. And that, my friends, translates into one thing, profits. Big, fat, juicy profits. So if you're looking for a stock that's going to make you feel good about investing in America and make your portfolio sing, look no further than Tesla. Now here's the deal. The incoming president has a track record of rewarding loyalty. You stick with him, he hooks you up, big jobs, fat contracts, you name it. And guess who's become his highest profile cheerleader? Yep, Elon Musk, the electric vehicle company's CEO, now has a direct line to the federal government. The promise of a cabinet-level appointment will mean that Musk could be rewarded with unprecedented access to federal resources, whether through direct financial support or regulatory leniency. Cabinet-level discussions could put him in a position to fast-track funding deals and greenlight initiatives like self-driving taxis with less resistance. Of course, there's always a risk. Musk, like others before him, could fall out of favor with Trump, and things could go south fast. Tesla is a weird beast. It's a tech company, sure, but let's be real, it's mostly a car maker. The competition, BYD and other Chinese brands are breathing down its neck. If you're a value investor, you're probably thinking, hard pass. And that's fair. But here's the kicker. Tesla's stock doesn't play by the rules. It's up a jaw-dropping 1,150% over the past 5 years. That's not normal. The company's worth $900 billion, that's billion with a B, and it's trading at 100 times forward earnings. But based on past trends and the evolving political landscape, the outlook for TSLA in 2025 is bullish. Just be prepared to act swiftly if Musk and Trump start having a falling out. Timing will be everything. But hold on, we're just getting started with Tesla. Remember all that talk about Trump's massive infrastructure plan? You know, the one that's going to rebuild our roads, bridges, and airports? Well, guess who stands to benefit from that? You guessed it, Tesla. See, a big part of Trump's infrastructure plan involves investing in electric vehicle charging stations across the country. And who do you think makes the best electric cars in the world? That's right, Tesla. It's a match made in heaven, folks. As more and more charging stations pop up, demand for Tesla's already hot-selling vehicles is going to skyrocket. And when demand goes up, guess what happens to the stock price? You got it. It goes to the moon. Now, you might be surprised to hear this, but Trump's presidency could actually be a good thing for green energy. That's right, you heard me correctly. While Trump may have pulled out of the Paris Climate Agreement, he's also expressed support for clean energy technologies that create jobs and boost the American economy. And when it comes to clean energy, Tesla is the undisputed king. From its cutting-edge solar panels to its revolutionary energy storage systems, Tesla is leading the charge towards a sustainable future. And here's the kicker. With Trump's focus on deregulation, Tesla will have even more freedom to innovate and expand its green energy empire. This is a company that's already light years ahead of the competition, and under a Trump presidency, it's only going to widen the gap. Alright, let's move on from the sleek electric world of Tesla to something a little more rugged. Let's talk about Kinder Morgan, ticker symbol KMI, the pipeline giant. Now I know what you're thinking, pipelines? That's so old school. And you know what? You're right, but sometimes old school is exactly what you need to make a killing in the stock market. See, pipelines are the arteries of the energy industry. They're the veins that transport oil and gas all across this great nation. And guess what? Trump loves energy independence. He wants America to be energy dominant. And that means one thing, more pipelines. Kinder Morgan is already the largest pipeline operator in the US, and with Trump's blessing, and likely some very friendly deregulation, they're poised to become an absolute behemoth. Remember the Keystone XL pipeline? That controversial project that was held up for years under the previous administration? Well, guess who's back, baby? That's right, Keystone XL is back on the table with Trump in the White House. And while Kinder Morgan isn't directly involved in the Keystone XL project, its revival signals a sea change in the regulatory environment for pipelines. It means that Trump is serious about unleashing American energy production, and that's great news for Kinder Morgan. With fewer regulations and a friendlier political climate, Kinder Morgan will be able to build new pipelines and expand existing ones at a breakneck pace. And that means more profits, plain and simple. Now let's talk about something near and dear to every investor's heart: dividends. Kinder Morgan is known for its juicy dividends, and under a Trump presidency, those dividends are only going to get juicier. See, with increased pipeline capacity and a surge in energy production, Kinder Morgan's cash flow is going to explode, and when a company has more cash than it knows what to do with, what's it going to do? That's right, it's going to share the wealth with its investors in the form of bigger and better dividends. So if you're looking for a stock that's going to pay you handsomely to hold it, Kinder Morgan is a no-brainer. It's a solid company with a bright future, and it's only going to get brighter under a Trump administration. Alright folks, let's talk Halliburton, ticker symbol HAL. You know Halliburton, right? One of the biggest names in the oil field services game. They provide all the heavy lifting, the technology, the know-how to get that black gold out of the ground. And let me tell you, under a Trump presidency, Halliburton was looking at a potential gold mine. Trump's energy policies, they were music to the ears of American oil and gas companies. We're talking deregulation, we're talking opening up federal lands for drilling. This wasn't just about drilling more though, it was about American energy independence. Trump wanted to make America energy dominant, and that meant unleashing the full potential of our domestic oil and gas reserves. And who benefits when you're ramping up production, needing more equipment, more services? You got it, companies like Halliburton. They were in the perfect position to capitalize on this new era of American energy. Now let's not forget the shale revolution. Remember that? Fracking technology unlocked vast reserves of oil and gas, particularly here in the US. And guess who was at the forefront of providing the technology and services for fracking? You guessed it, Halliburton. Trump's policies were like throwing gasoline on an already roaring fire. They were set to supercharge the shale industry. More pipelines, fewer regulations, it all added up to a more favorable environment for companies like Halliburton who were already killing it in the shale game, and the market was taking notice. Investor sentiment towards Halliburton was incredibly optimistic. Everyone wanted a piece of the action. But it wasn't just hype, folks. This was about real, tangible growth potential. The numbers were there, the policies were aligned, and Halliburton was primed to ride this wave of American energy dominance. Now, some folks were hesitant. They'd say, isn't this a risky bet? What about the environmental concerns? What about the volatility of the oil market? And yeah, those are valid points. The oil and gas industry, it ain't for the faint of heart. It's cyclical, it's influenced by global events, and yeah, there are environmental considerations. But here's the thing, Halliburton, they're not new to this game. They've weathered the storms before, they've adapted, they've innovated, and with Trump's pro-business, pro-energy policies, they had the wind at their backs. This wasn't a guarantee, nothing in the stock market is, but it was an opportunity, a chance to get in on the ground floor of what could be a very profitable ride. Alright, let's talk Coinbase Global Inc, ticker symbol, COIN. Now some of you might be thinking, Trump and crypto? Didn't he say some not so nice things about Bitcoin back in the day? And yeah, you're right, he did. But hear me out because things have changed, and the crypto landscape under a potential second Trump term is actually looking pretty darn interesting. First off, you gotta remember, Trump loves a good disruption. He built his whole brand on it. And what's more disruptive than decentralized finance, plus a weaker dollar? That often sends investors running to alternative assets, and guess what's at the top of that list? You got it, crypto. Now I'm not saying Trump's going to suddenly become a Bitcoin evangelist, but here's the key takeaway. His policies, whether intentionally or not, could create a very favorable environment for crypto to flourish. Think deregulation, a focus on American innovation, and a potential weakening of the dollar. All of these factors could push Coinbase as the leading crypto exchange to new heights. Remember, we're talking about potential here, not guarantees. But when you look at the bigger picture, Coinbase under a second Trump term, it's a gamble, sure, but it might be one worth taking. Now let's talk regulation. It's the word that strikes fear into the hearts of many a crypto enthusiast. But with Trump, it could actually be a good thing for Coinbase. See, Trump's all about cutting red tape, and the crypto world is practically drowning in it right now. A more hands-off approach from the government could allow Coinbase to innovate faster, attract more investors, and cement its position as the go-to platform for all things crypto. And let's not forget, clarity is king in the regulatory world. Even if Trump doesn't go full-on crypto cheerleader, just providing some much-needed regulatory clarity could be a game-changer for Coinbase and the entire industry. Think about it. Right now, companies like Coinbase are navigating a bit of a regulatory minefield, but with clearer guidelines they can focus on what they do best, providing a safe, secure, and user-friendly platform for people to buy, sell, and trade crypto. And that, my friends, is a recipe for success. So while some might see Trump's potential return as a threat to crypto, I see it as an opportunity for Coinbase to thrive in a more open and less restrictive regulatory environment, and that's something worth paying attention to. Okay, let's be real. Investing in Coinbase, especially with all the political talk, is not for the faint of heart. It's a high-risk, high-reward kind of play. But that's what makes it so exciting, right? On the one hand, you have the potential for massive growth. If Trump's policies do indeed create a favorable environment for crypto, Coinbase could see its user base and revenue skyrocket. We're talking about a company that's already a leader in a rapidly growing industry. Imagine the possibilities if that growth gets supercharged. On the other hand, there's always the risk that things could go the other way. Maybe Trump's policies aren't as crypto-friendly as we hope. Maybe the regulatory landscape remains murky, or maybe, just maybe, the crypto bubble bursts. These are all risks you have to consider before hitting that buy button. But hey, that's the stock market for you. It's a roller coaster ride full of ups and downs. But with the right research, a little bit of luck, and maybe a dash of Trump-induced volatility, Coinbase could just be the ticket to some serious gains. Now, let's talk Robinhood, ticker symbol HOOD. This company, known for democratizing investing and bringing Wall Street to Main Street, might just find a surprisingly receptive audience in a second Trump presidency. Remember, Trump loves to position himself as a champion of the everyday American, the underdog, the forgotten man, and Robinhood, with its mission to empower individual investors, aligns perfectly with that narrative. Trump's policies, often focused on deregulation and boosting American businesses, could create a fertile ground for Robinhood to flourish. Think about it. A booming economy fueled by Trump's policies could lead to more people wanting to invest their money. And who are they going to turn to? The platform that made investing accessible and easy, Robinhood. The potential synergy here is undeniable. Trump's populist appeal combined with Robinhood's mission to empower individual investors creates a compelling narrative, one that could translate into significant growth for the company. It's a classic case of the right company at the right time with the right political winds at its back. One of the hallmarks of the Trump era was a roaring bull market. Remember those days? Well, a second Trump term could potentially reignite that market frenzy, and Robinhood, with its easy-to-use platform and focus on younger investors, would be perfectly positioned to capitalize on it. Imagine a scenario where Trump's policies lead to a surge in the stock market. Retail investors, many of whom flocked to Robinhood during the meme stock craze, would be eager to jump back into the action, and Robinhood, with its commission-free trading and gamified interface, would be the platform of choice for many. It's not just about speculation, though. A strong economy under Trump could lead to real growth for American companies, attracting even more investors to the market. And who's going to be there to welcome them with open arms? You guessed it, Robinhood. This is not to say that a second Trump term guarantees another bull market. But the potential is there, and Robinhood, with its massive user base and finger on the pulse of retail investors, is primed to ride that wave. Now let's not sugarcoat things. Investing in Robinhood, especially with a potential Trump presidency in the mix, comes with its fair share of risks. First off, there's the regulatory hurdle. Robinhood has faced its share of scrutiny from regulators, and a Trump administration, despite its deregulatory rhetoric, might not be so quick to give them a free pass. Remember, even with a pro-business stance, Trump's not afraid to throw his weight around when he feels like it. Then there's the reputational risk. Robinhood's image took a hit during the GameStop saga, with accusations of market manipulation and siding with Wall Street over the little guy. A second Trump term, often associated with populist anger and a distrust of institutions, could amplify these negative perceptions. So while Robinhood might seem like a safe bet in a potential Trumpian bull market, it's crucial to remember the risks involved. Regulatory scrutiny and reputational damage could easily derail Robinhood's growth even in a favorable economic environment. So there you have it, folks. 5 stocks that could potentially thrive under a second Trump presidency. From Tesla's electric dreams to Coinbase's crypto ambitions, we've covered a lot of ground today. Remember, this isn't financial advice. It's just me sharing my thoughts and observations on how the market might react to a Trump comeback. Always do your own research, consult with a financial advisor, and never invest more than you can afford to lose. If you're enjoying this and want a deeper dive into spotting undervalued stocks, I've put together a free guide for you. 7 proven steps to spot undervalued stocks like a pro. You can grab it from the link in the description below. But hey, enough about stocks for now. What do you guys think? Are you bullish on a Trump-powered market? Let me know in the comments below. And while you're there, don't forget to hit that like button and subscribe to the channel for more market insights and stock picks. Until next time, happy investing.